It's Blake here at Trade Tracer. This video is designed to help you get prepared for this week's trading. We're going to go over some stocks, primarily the indexes, and Bitcoin and Ethereum, some crypto. As always, none of this is financial advice. Trade and invest at your own risk. So we are in the third uptrend of this year. So we had our first uptrend. It was short-lived back at the end of January going into February. Second uptrend in March. This one actually paid very nicely. This was a multi-week uptrend. And then since we broke the 50-day, we broke the cloud. And, this candle is really that confirmation candle of just a bearish engulfing candle, never even traded back up into this price. And since then, it's been, really ugly downtrend. And the priority has been preservation of capital and year-to-date gains. We had a couple head fakes back here. Entering no trend on May 4th and also no trend again on May 17th. So you could see some attempts. And then most recently, we talked about potentially seeing this double bottom and seeing if this would hold. Well, ultimately it did hold, and we closed inside of that cloud on Wednesday of last week. So Wednesday we actually traded up into above the 10 SMA, closed above it. I had mentioned that we technically have rules to get long here, but higher odds exist in uptrend. Well, whether you took that entry this day or waited until we broke above the highs the next day heading into uptrend, either way, you had 2 days to get long early in this trend. And you can see Friday, told you wasn't going to be doing much of anything. We were on easy street, stop sending motions out. And Friday really wound up being a really nice day to maybe take some profits if you were getting in on Wednesday or Thursday heading into the long weekend. So what do we do now, right? So we're in a 3-day uptrend, and I think it's very likely that we could potentially come and test the top of this cloud, potentially test that 50-day moving average. Now we're in a bear market, so my gut tells me that, yeah, we could see, a tradable bounce here, trap some bulls once again above the cloud and then maybe roll back over. That doesn't surprise me. That type of price action doesn't surprise me until we can get multiple closes above the cloud. Then I will start to be more aggressive in this market. Until then, I'm still going to have, a broader bearish thesis on the broader market. So, should be long already. The S&P, if you see this was on our playbook, I'll pull up our drawings here. And this was what we were focused on this week, was heading into uptrend. So you can see this went out the 26th. So above, was it the 25th high? That would constitute an uptrend. So uptrend on Thursday and Friday tagged both of our levels. So you can see just how nicely price respected these fib extensions and these previous price inflection points I've identified. And so from here, this was really all I was expecting. So so from here, I think if you're just riding this long, you can put your stop back at your entry and ride this and see if we can come and tag the top of this cloud. If we do and then bull flag above, so if we come up and tag this and put some price action above the cloud and then take off, that would be the most ideal scenario. Ideally, we'd like to be back above the 200-day moving average, which you can see we still got a ways to go. So until we can get back above this 200-day, like I said, I'm still going to have the macro bearish thesis. You can see the 200-day is actually curling down now. But we could absolutely see 10, 12, 15% rips. That's what bear markets do. Bear markets likes to, rip and trap people that were short and make them feel pain, and then the exact opposite on the downside, making sure that the bulls that got in that thought this was the the signal to enter, really that was the signal to be taking profits. And if you were getting in back here, because we're in a bear market, and all uptrends aren't created equally, right? So if we had price above the 50, above the 10, and above the 200, that's a different scenario. That's this type of market here. When price is below and below the cloud, we're prepared for the worst, right? We're cautious and we're being very selective with trades. And if you're following the system, as we always say, get long the index first, and when we go into uptrend, and then you can allocate more long market exposure with trades from the trading playbook. Yeah, I'm fully exposed to the S&P right now. This is the exposure that I want, and I'm going to be adding risk exposure with the playbook. With some of the profits that we've already taken out of the S&P. Let's take a look at Bitcoin and Ethereum. I'll take away this 200. This is again also down majorly from its highs, but we had highlighted this area a while ago, and this is about almost 2 years of trading, year and a half of trading, and you can see this price inflection point, this price zone I've highlighted has been really important. And I said if we lose this price level, don't expect any sort of support until we get roughly that 20,000 area. So yeah, we really need to hold this level. But on the flip side, I mentioned this could be a great buying opportunity if we do hold these lows. So you can see I have an alert here, roughly 31.6 on BTC. Bitcoin above that, above 32,000 on Bitcoin. I think, we could absolutely see a nice run to 34, 35. You guys know long term, I think Bitcoin and Ethereum primarily, those two are much higher than where they are today. So yeah, similar story, right? We've traded into this this price range, and we're so far holding this area. So you can see back above 2,200 on Ethereum. Yeah, I think that's definitely rules to go ahead and take a stab at getting some new long market exposure on ETH. Let's wrap it up. Let's talk about the Qs really quickly. Last week we talked about this 50% fib retracement. We had held this fib. Now we're in an uptrend. So could the Qs and tech lead on the way up? Absolutely. You'll see we do have exposure into semis. So SOXX was one of our trades as well. You can see back right at the top of that cloud, and we're looking at some levels above at potential areas to be scaling and taking profits. But we do hold this in the investment portfolio primarily because we want to see tech lead, and when semis lead tech, that's about the best you can ask for. So really watching to see what NVIDIA, AMD, TSM, some of those names do this week. And I'm going to be keeping a very close eye on the QQQ. We're already long the S&P. It's showing relative strength. But I think the NASDAQ could potentially play catch up this week or next if we decide that, we want to continue this trend. So yeah, I'm going to be looking to add exposure to NASDAQ, potentially some semis next week, and some beaten down names maybe in FANG even. So keep an eye out for that. This week, like I said, we're in uptrend. I'm going to be looking to allocate. I'm already long the S&P. I'll be looking to get long the NASDAQ and some chip names potentially. So I'll see you guys on the open. Take care.